Hi, this is Justin Hobbs with the California MBA. Welcome to Connect, our monthly podcast featuring one-on-one interviews with movers and shakers and headliners in the mortgage industry. Today, I'm excited to be joined by S.A. Ibrahim. He's chairman of Mortgage Media, which is a new company just formed in 2018, but they've already generated a lot of buzz with their original industry reporting and video interviews, podcasts, and more. So I'm excited to hear what S.A. has to say about where the industry is, and sort of his background, how he got to where he's at, and even more. So, but before we get started, though, I want to thank our sponsors at the Real Estate Services Trust, or REST. So, if you're looking for high-quality employee benefits that don't break the bank, which I think that's everyone in the industry this year, the California MBA has an employee benefit solution that could be a game changer for your organization. So, we've established in partnership with the Marsh & McLennan Agency, which is a nationwide top leading brokerage firm, we've established a Real Estate Services Trust, which provides real estate services employees with competitive benefit plan options at affordable rates. So by leveraging the specific health profile of the mortgage industry, the real estate services industry, we've been able to create a larger risk pool. And so in a sense, it gives small companies access to big company benefit plan options. And benefits, there's benefits beyond just saving money. There's a lot of great value-added options at no additional cost for companies that enroll. So if you're interested in finding out more if REST can help your company save money, retain employees, and provide your employees better benefit options, then make sure to click the link in the description or the show notes below. So with that out of the way, SA, there's a lot to talk about in the industry right now, where things are at and where we're going. But before we get into that, I want to hear your story. I always like to ask folks, how they got to where they're at in the industry. So tell us for a moment, sort of how you got to where you're at now.
First of all, Dustin, it's great to see you again, and we go back to when I was on the board for so many years at the California Mortgage Bankers Association, back working with exciting people like Bill Dallas and Chris George, and bringing the California Mortgage Bankers Association back into profitability and recruiting great people like you and so on. So terrific being here. So so this is, I'm in a sense retired. I retired from Radian almost 2 years ago after a long career in the financial services. I was with Radian for 12 years and experienced one of the biggest downturns in the industry, and our stock was decimated and we dropped to below $1. And when we brought it back to, my team and I brought it back to $19 and got our investment grade ratings back in our mortgage insurance business, and disposed off our financial guarantee business, one of the few companies that actually made money, that did not lose a lot of money. In fact, we were able to cash that in. I said it's time to do other things and more exciting things. And while my board initially tried to talk me out of retiring, the reason I retired is for stuff like this, because when you are running a public company, in many ways I could not invest in other companies and so on, because somehow or the other, that company, if it did business with a public company, we'd have to a disclosure event or issues. So I'm having a lot of fun. So I keep telling people, when you're a public company CEO, it's a very glamorous job, but 80% of that job is fighting fires and dealing with, I can call it now, otherwise boring stuff, and now I can only concentrate on the fun stuff.
Well, you put out some fires during that time. You were Radian for sure. What about before that? What I always like about your background is you've run both sort of one of the top mortgage companies and one of the top, vendor companies in the industry. So you've seen it sort of from both sides.
Well, that's what makes life exciting, and that's what helped me even at Radian to anchor me in and look at things from the point of view of our customers, which were the mortgage lenders. And I have been a huge fan of the industry. This is an industry that has so many entrepreneurs, people with so many ideas, and there's a lot of new ideas growing all the time. So, nobody can keep up with what's going around the corner. It's a very exciting industry, and it's always changing. So that's what makes it so exciting. And most important of all is the mortgage industry performs a huge service. I mean, it's a pretty noble calling to help people be able to buy their home, which is probably one of the only financial decision which is equivalent of having a child or getting married.
It's right up there, absolutely. Well, and that's what I always like about talking to mortgage guys. I mean, you all have that in common. That's the one thing you always go back to is what are we doing in this business? You're helping families get into homes, and
Right. And at Greenpoint, again, I've been very fortunate in being surrounded by outstanding people. At Greenpoint, we were able to take that company from, I use poetic license in rounding things off, from 6 billion in originations to 60 billion in 6 years. And in the time, grew our profitability enormously, introduced new technology where we were awarded the biggest technology innovator award by a global panel, and all kinds of exciting things. But it all comes down to the amazing people who populate the mortgage industry, and they're very passionate and extremely dedicated. And I really owe my career to those people in both companies, as well as Chemical Bank before that, which later on became today's JP Morgan Chase Mortgage. Yeah. It's today's Chase Mortgage.
Yeah, it's a small world in the mortgage business for sure. So tell us about this new company that I believe that you and actually Dave Stevens have been working with at Mortgage
Right.
Media.
So we started Mortgage Media. I came up with the idea, and then Eric Souza, who had worked for me at Greenpoint, and I'd stayed in touch with him, and Tom Wilkins, who recently, who I got to know when Greenpoint partnered with Dorado, and since then, Dorado and Greenpoint, and then subsequent companies have been organizing a think tank of mortgage industry professionals twice a year. So we thought, going back to all our experiences, that the biggest way people learn in a vast industry like that is through peer-to-peer contact. And most people don't get a chance to spend one-on-one time with some of the more exciting people in the industry, be it Dave Stevens, but there's so many people in the industry who are amazing. And I'll just pick on one, Chris George. I mean, you can't keep up with the guy. I mean, he alone is like a world in himself. So how do you bring some of those people closer to everybody in the industry so that they can learn from them? If they're at a senior level, if they're at a mid-career level, they can take some of the ideas, and if they're at junior level, they can aspire to be one of them, because these people have interesting stories, and there's a lot of future Chris Georges and Bill Dallases in the junior category in our industry.
Well, now you put it that way, that makes it kind of interesting. Now I want to find out who those are.
So Mortgage Media shares these people, their stories, their insights, their knowledge with everybody. And then with Dave Stevens now on board, we also get a chance to opine on the more topical issues that are facing the industry.
You talk about wealth of knowledge between you and Dave. So did you guys see that there was maybe a gap in or a need for better reporting on industry news? I mean, there's a lot of publications that report on. I mean, every newspaper in the country and every outlet in the country reports on business matters. Did you see there was sort of like a gap in there?
Well, again, if you look at sheer content, there's a lot of people report the content. What we wanted to combine was passion, opinion, excitement, and the personal stories with the content. So that's what we're all about. This is, a very important industry, but at its essence, every business is a human business. There's human beings who make the stories, who make the connections, who make things happen. And a lot of our focus is on those human beings. Yes, we get into issues and so on. But even when Dave interviews a lot of people on issues, and he's a wealth of knowledge and connections and everything, and a wonderful person who I've known for so many years. But, we get personal opinions because that's what it is. Nobody has the right answer, particularly when you're looking at the future and pointing at some of the challenges facing us. So we allow that human dimension to come out. And that's what Mortgage Media is all about.
I like that. So do you think that, and this has always been a bit of always stuck with me, I do the communications and PR marketing for the California MBA. My background is in politics and media. And so, it always strikes me that there are not enough lenders. Lenders don't do enough to engage with media. And, you see this as maybe an opportunity where they can feel more comfortable working with you guys to get their stories out? And because you're right, there are a ton of great stories out there that just don't get told.
Yeah, and the advantage we have is, in many cases, they know of us or they know us directly and trust us. And we're not here to play gotcha games or make anybody look silly. We are here to actually celebrate the amazing people who make up our industry and their opinions and their thoughts, and that's what we do. So we found an enormous receptivity with lenders and with other people who supply services to the industry. One of our early interviews was with Jonathan Core, who has taken over from Sig and done an amazing job. And I knew Sig for years when he started Ellie Mae. And, for a long time you said, is there somebody who could fill Sig's shoes? And Jonathan is doing an outstanding job, and we were able to capture him and get people to share. So we're trusted, we have access, and we hope to continue to share with everybody in the industry and outside some of the excitement and energy and vision that these people have.
That's great. That's great. So, from your perch, at now with sort of a mortgage a media firm, you've been a public company CEO. If you could give some advice to someone, because this is something I always run into talking to folks in the industry who are just, in a sense, a lot of people are just terrified to talk to reporters, and there's good reason why, right? I mean, there's good reason and bad reason. So if you could, from your perspective, your background, you could tell someone, encourage them how to engage with media. One tip, maybe, what would it be?
So first of all, there's a lot of places where you can get trained or just get a video camera and start speaking in front of it and get your key points very sharply defined before you go into discussion so you can get them out. And then you may want to repeat them for emphasis. But then, don't be nervous, don't be afraid. Now, the problem that most people have, and I've had that experience, is sometimes, you talk to reporters and they will take what you said and either pick out a piece out of context or twist it because they're trying to get a headline. So start off with somebody like you or us or many of the people who are more in the industry and are trying to do what we do, because these are trusted sources before you go into the big media and get some kind of training. So before you go on 60 Minutes, you've got to go through a lot of other things.
So mortgage media first, then 60 Minutes.
Right.
So turning to industry itself here. So in October, the MBA's annual forecast for 2019, it was, essentially the originations are going to be flat for the year overall. And, so from your perch at sort of 50,000 feet, where do you see that as sort of a natural result of where we're at in the cycle, or is there something, in the way of where we're at in as an industry? I mean, the economy seems like we're doing really good right now, and unemployment's really low. So, I mean, sort of, where do you see the next year or two with originations, and why?
So, a couple of perspectives on the cycle. By definition, we've always been a cyclical industry. We've seen cycles come and go. I like the shallow cycles best. The deep cycles, and hopefully we'll never see the kind of cycle we saw in the 2007, 8, 9, 10 period in our lifetimes. The shallow cycles are great because they squeeze out the excesses in the industry. They get us all focused on the essentials, managing expenses, thinking about what exactly our role is. And then we have easy times when there's a lot of refi business. Right now, the industry is hit with the fact that refis have gone away because rates have gone up. Purchase market is also experiencing a slowdown. I was kind of positively surprised that the MBA is saying flat versus down, which is great, but it's still, there's a lot of capacity that builds in and then it squeezes out. This is the story of our industry, and I think over time we develop great leaders in the industry because they go through these cycles. So I think, yes, this is a challenging year. I hear from everybody that not only are originations down, but there's a lot of pressure on margins. And the downside of this cycle is that it's happening at a time when origination costs are very high. So, you've got a layer of expenses that people built in, plus you've got to be very careful now that, you're going to focus on loans that close, because the cost of working on a loan that doesn't close is much greater than the past. In the past, when we all had down cycles, we would go and try and get all kinds of borrowers so we see if we would qualify them. The great thing from my perspective, looking at our industry as a whole, is this down cycle is happening, like you said, at a time when unemployment is very, very low. We've got a strong economy in terms of the unemployment rate. And while the stock market has been going through ups and downs, in general, it's been pretty strong. Everywhere you see the other indicators of the economy are down. So yes, homes, sales are down, home prices are down in some of the overheated market, but I am encouraged that many of the things that caused some of the big problems for the industry in the down cycle last time, such as some of the toxic products. They don't exist anymore. Lenders have been pretty tight. So I hope, since cyclically we've got to endure a cycle at some point, that this cycle and this year gets behind us very quickly in a benign way, so then we look forward to the next growth cycle. Ultimately, though, I'm very encouraged that the long-term signs for our industry are positive. There's a huge cohort of people who are, under 25, and there's a bigger cohort of people who are under 15 who are going to be home buyers in the future. Now, in many cases, these are different people than what we've seen, where I saw in my career. In many cases, particularly if you focus on those under 15 and to a large extent under 25, these are, Hispanic, African American, Asian, and also, the same buyers, that kind of buyers we had in the past. It's just that the proportions have changed so much so. I know we used to, Teresa Bryce, who worked for me, Bracemore, who worked for me at Radian, would always cite the fact that 40% of the future buyers are going to be Hispanic. So it's another way in which we as an industry are going to have to learn how to adapt to this changing demographic and to meet their needs. And their needs might be different in some ways, but the beauty of our industry is we've risen to all of these challenges.
Well, and I think that one of those, I think you're right about the demographics for sure, and I think even the sources of income. I think that is going to be a big challenge in the future. How do you deal with folks who are driving Uber or recharging scooter batteries in San Diego? I mean, what do you do with that income? I think that's going to be a challenge for the industry for sure. So for a number of years now, and it's funny, this is perfect segue here. It's for a number of years now, the industry has recognized the need to increase efforts to promote diversity in the workforce. So how do you think we've been? How do you think we've done? What do you think still needs to be done? Where are we at in that process with improving diversity, both in the workforce and with the borrower cohort?
One of the areas that we have to recognize is once you go below the top layers in the industry, we are a very diverse industry. We've got an industry where I believe women outnumber men in terms of the employment. We've got a lot of people from different demographic groups that make up the industry. Now, that said, we've got to find a way to move them to the top. And it's always very challenging and difficult because you've got one or two positions at the top and you've got many people vying for them. And it's a very difficult judgment call. And I had a very interesting panel I interviewed a couple of months ago, which was the Empower Women's panel, and I was blown away by the quality and the vision and the skill set and and how articulate some of these women leaders in the industry are. And later on today, I'm going to be interviewing some of the Empower panel people also. So I think there's two or three dimensions to it. One is we need to make sure the boardrooms and the selection processes include people from that diversity. So we need to start at that highest level because they're the ones who are going to be making the selection. It's very hard for somebody to see all the positive attributes in somebody who's so different from them. The second thing we've got to do is, without in any way doing things that are unfair or, making other people who are not part of the the demographics we're trying to encourage feel they're disadvantaged. We've got to give everybody opportunities and bring in more people and be more inclusive as an industry. So there's a huge cohort of people. Now, there was somebody I was having a discussion with who said we need to get more women and more, Hispanic and African American employees into the sales group. I think in certain markets we already have a lot. In fact, some of my star performers at Radian as well as Greenpoint were women. Women were the top performers on the sales side. And then, in places like Southern California and so on, and Texas, we had, and in Florida to some extent with the Cuban Americans, we had more Hispanic Americans who came up. But we have to find out by creating work environments where we talk to them and find out what is it that may be blocking them, what are some of the encouraging role models that we've got to give them, and create maybe a buddy system to help them come along. And again, I'm not suggesting we compromise our standards in promoting everybody, because I don't believe that just because somebody, is from a certain demographic segment, they're less bright or so on. They're equally bright. They just haven't had the opportunity. Or somebody's a woman, they're less bright. In fact, they're equally bright. In fact, in most cases, some of the women I had were working for me.
I work for them.
Really were brighter in many ways. So we just have to be open-minded about them and find out what's blocking them and help them. And a lot of it is giving them confidence as well as opportunity. I used to tell somebody, not just women, men, not across all demographics. I used to tell everybody that my job as the CEO and leader of all the companies I've worked on, a big percentage of my job, maybe 10%, 15% of my job, was to go around and find out how to turn on people in the company. Because I think every one of us is capable of achieving a lot more than we believe we can. And there are barriers we have set for ourselves. And maybe some of the barriers that some of the people who come from different demographic groups are different because they have not experienced the same role models. They have been subtly as well as directly getting signals that say, oh, you should not expect to get somewhere. And we've got to find a way to erase and remove those barriers so they feel the confidence and they aspire to get to the top.
Yeah.
And then they will get to the top.
Well, and I think in encouraging any professional development that we can for these folks as well. I mean, I'll mention that a quick plug for our own Future Leaders program that I staff, and I see it all the time. I mean, the diversity within that Future Leaders group that we do every year, and I'm sure it's the same at the National MBA. It's incredible. And it really shows that there's a lot of power and a lot of potential in that diversity that we have within the younger segment of the industry.
Maybe I'll come by and interview some of those people at the Future Leaders program because I remember having sent some people from the companies I was with, and they really got a lot out of it.
Yeah, I think Teresa actually was one of our Future Leaders way back now.
She's a very inspiring role model. Here's a woman who, whose mom was a school teacher in Norfolk. Her dad worked in the naval shipyard. She went to, Virginia, University of Virginia, then went to Columbia, got her, JD degree from Columbia. She can hold up to anybody out there in terms of brilliance and standard, knowledge and insights and experience. So, we need to take people like that and make them ambassadors in the industry to open up doors for them. 100%. But Marcia and what she's doing and what you guys are doing is also amazing. The MBA has really started to focus on it, and I'm delighted. By the way, I have a foundation from my family, which is when Greenpoint sold, I took a lot of the money I made and put it in a foundation, said I don't really need it. And one of the things we do is we have a scholarship we set up where we've paid for, I believe so far, full tuition for 6 women to get the MBA from Wharton School. It's strictly focused on women getting the MBA and becoming better role models.
That's great. There needs to be more of that.
Because I think, in my mom's generation, she was the brightest person I knew, but she got married right after she finished high school. She never got a chance to go to college. She would have been brilliant if she had had those opportunities. And it always tells me, how can I make up for what my mom didn't get an opportunity to do with other women?
Well, it sounds like you're working on that. Absolutely. So speaking of these younger borrowers, so they're becoming the millennial borrowers. You can't have a conversation about the industry without talking about millennials. They're becoming more and more prevalent in the borrower cohort. Now, I think they're actually the largest cohort within borrowers right now. So how do you think that the ascent of these millennial borrowers, how is that going to change the nature, the delivery of mortgage products in the next couple of years?
We try to classify millennials in different groups, and there's some things that are common to them, but each one is very unique and to some extent based on where they live and what kind of work they do and other factors. But it's very, very interesting. I talked to some of my friends my age, and we talk about all these fancy cars, and they say, he says, my son doesn't really care about a car. And I said, my son doesn't care about a car either. In fact, he says, why do I have to want to own a car? Same thing about a house or anything. They look at it as a utility and a problem to be solved. So what do we do as an industry for them? The auto industry is testing subscriptions and other plans for things like that. Do we create the same kind of thing for housing? I don't know the answers, but we've got to understand what their needs are and address them. But there's still a large number of them who still will follow the conventional steps of, if they're not living in major cities, they still need a car. They still need a home. Many of them still want to get married early. My son doesn't. It's a, so you have many different segments in that millennial population, and I find it very difficult to label them all, paint them all with the same brush. Now they're very independent-minded, and they need a lot more information, and they need different kinds of information, and some of them need more hand-holding, and some of them, so they want to be able to choose the experience they have. But the number one factor with them is they monitor what other people's experience has been. So if they're checking out a lender or a loan, they're very, so you have to pay a lot of attention to making sure you treat your customers well, so that they will monitor that experience. And my son has never gotten a mortgage, but he knows some of the mortgage lenders based on just the reputations they have. So managing a reputation, making it easy for them, not spoon-feeding them, giving them a lot of information so they can make a choice. These are some of the factors I think that go in.
I mean, I think I'm still blown away, and I think this is only going to increase in this way. That the amount of data and information that this next generation of borrowers is going to have available to them that previous generations just didn't. I mean, mortgage lenders and real estate agents and they were the keepers of so much information that you just couldn't access anyway. Now, I mean, it's available everywhere. So I mean,
for simple things, I mean, these people know far more. They do far more research. Whenever we go out to dinner or lunch with my son, he picks out a restaurant and he's read up all the history of it and what the dishes. I mean, he knows all of that before going. I never knew or cared about those things when I was his age. So just think about a home. He's got very definitive idea about the kind of appliances he wants and the kind of kitchen layout he wants, and
so much information right now. Yeah. So, looking at this is kind of an interesting question here. So as we're filming this, the national government, the Congress is just the government has reopened in the last week or so, and so it's not like Congress and the president are working necessarily well right now. But this is kind of a what-if question to you, SA. So if you could tell Congress and the president to work on one mortgage or housing-related issue this year, and let's just pretend for a moment that it would work and everyone would work together, what would it be?
So one of the big concerns in many areas is housing affordability. So I don't have any easy answers to that, but I know a lot of, I have a home in Bellevue, Washington, and the Seattle area is experiencing the same issues as my home here in California. I happen to be, for whatever reason, in two of the most expensive markets where affordability is a big issue. So that is one of the solutions. And the only advice I would give to the government is don't come up with a solution without taking the practical considerations and without co-opting the industry. Quite often, in a very well-intended manner, the government has tended to create solutions that are unworkable and that don't blend with the normal incentive process. Understand, one of the things I always keep telling is, I have never seen people more determined to go out and do more business than people in the mortgage industry. So, that incentive, work with industry experts, and then carve out a solution to affordability that makes a sense. The other thing they're taking on is, and this has been talked about for so many years, but if they don't find a solution, don't do, is GSE reform. And the only issue, I'm not going to take sides on anything there, the only issue I'm going to make is liquidity. Don't tamper with liquidity solutions, because liquidity in housing in good times and bad times is very, very critical. And when I was at Radian, and I don't know where my mind is now because I haven't studied that issue closely, our view was some percentage of a government guarantee, government backing, whether it was a 50% LTV or whatever, and the rest of it being private, was the answer. So those are the two things. But work with the industry. Don't develop solutions in isolation, because they won't work. There'll be problems. And we in the industry, I generally think we have a lot of leaders and a lot of people in the industry who deeply care about protecting the future housing market. And if there are things that can be done on the affordability side that'll open up the door for more people to buy homes, do you think we in the industry will resist it? We'll love that. That's more business for us.
Absolutely. Yeah. I mean, in creating some certainties, the long-term certainty, I think is huge for us too. So I've got one last question here. So clearly, you said earlier on that you're retired, but clearly you're not ready to go, golfing and go on a perpetual vacation. So, what one thing excites you about the industry going forward? We've talked about a lot of stuff, but is there one thing that really, what gets you up in the morning and wants you to still, be involved in the industry and be an advocate?
So there's a lot more tools and technology and ways of doing things, social engineering, connecting things, and social media that's available now than was the case when I was early in my career. And since I don't have, I'm not tied into a large company, and I don't have huge requirements to go through legal teams and go through all those things. What inspires me is ideas. Coming up with ideas and working with smart people and they come up with ideas and helping them launch those ideas in a different way. So I'm involved with many different startups, and I'll only mention a few. One of them is Social Survey, an advisor to Scott Harris, is a terrific guy, and they figure out how to help people improve their Yelp and Google ratings. I'm involved with a company called Meritize, which makes student loans to very, very specialized fields of students who, with very high employment rate in critical skill areas. And now they've migrated into working with employers on filling jobs for which the employers don't have any successors. So they're just partnering. First partner is a Houston school that needs diesel mechanics. The old generation of diesel mechanics is retiring, and the next generation is not coming in. So the school a training program that will train these students will finance it, and then the employer will hire some of those people. So that's a great school. Then I'm involved in helping States Title, which is an amazing company that's trying to use new technology in making the title insurance process smoother, better, and they're doing it while working with other title companies. And hopefully what they're doing is infectious and will transform the whole industry. So there's a lot of exciting things. And then mortgage media is the other one. So there's a number of these exciting things going on.
I'm not sure how you call that retired. It sounds like
it is retired. It's still retired because I don't have a full-time job in any of these industries, and my goal is to, after some of these things find their legs, move on. So at some point, hopefully, Eric and Dave Stevens and Tom, if he's Wilkins, if he's so inclined or not, will take on more of it, or then I'll move on to the next thing. But meantime, it's very, very exciting to be here with you, and thanks for my getting involved with mortgage media. I get a chance to reacquaint myself with the wonderful people who made up my past, like you, and they can now become part of my present.
Absolutely. It's great to see you again. And the industry is definitely richer for having you stick around. So I'm glad you haven't retired and gone off to the golf course for the rest of your life. So.
Well, this is my golf.
Yeah, absolutely. Absolutely. We'll take it. So, S.A., hey, thanks again for joining us.
Thank you.
We're filming during the week of the MBA's IMB conference, so S.A.'s got to get back to the conference. But that does it for this episode of Connect. Join us next month as we take on our next guest in a one-on-one interview. And if you have any questions about the California MBA, be sure to click in the link below in the description or the show notes.
And if I can add one more thing.
Absolutely.
You and Susan have done such a great job at the California Mortgage Bankers Association. My congratulations to you in terms of what you've done, and I hope you keep doing it for a long time.
Well, I won't argue with that. Thanks again, S.A.
Thank you.